Guys, oh shit. Sorry.
See, we're back.
We haven't done this in a while. Sorry.
Yeah, we're a little rusty.
We can restart it. Here we go.
No, we'll keep it in.
Go ahead. Let's restart it.
You serious?
No, we're gonna keep it in, but let's restart it.
Oh.
Guys, oh shit. Okay, one more time.
You did that on purpose, you fucker.
Not. You know what?
You're trying too hard to be funny.
Let's pretend that didn't happen.
Anyway, guys.
Guys, back. I mean, okay, that was not on purpose, bro. Seriously. Sorry.
Goodness.
Our synchronicity is a bit off. So we'll edit that part out for real this time. Don't edit it out, but edit this part out of me saying this. I'm serious on that part.
Okay.
Wait, I'm actually serious. Don't leave this in.
All right.
Anyway.
Guys, it's been a long time, but we're back, and it's going to be consecutive. I know y'all missed us, or hopefully you did, but we're coming at y'all with another macro video. We got a lot to go over. Bitcoin's at 100K. We got a new president. A lot of stuff happening, man.
Come on, man.
Yeah.
Trump got his NBA draft going on.
Yep.
Yeah, we got markets looking perfect. We got the Fed cutting rates. We got a lot.
You got Michael Saylor making $500 million a day.
$500 million a day.
No one knows who Holton Bugs is. Anyway, let's jump straight into it, guys.
What? It's an inside joke. It's not for them. It's for you, buddy.
I didn't like that.
All right, moving on.
All right, guys. So we're going to hop right into it because it's a lot to cover today. We're going to start off looking at some charts here. Starting per usual, central bank balance sheet is falling off a cliff. I like that. We are at COVID levels pretty much.
Primarily getting rid of treasury bonds.
Yep.
Still getting rid of MBS2 mortgage-backed securities, but the pace for mortgage-backed security runoff has definitely slowed.
Yep. We got the M2 money supply. They printing money somewhere still.
Fiscally.
Yeah, but it's okay because that balance sheet's being offloaded, and it's hard for them to do both at once.
So balance sheet runoff, that's like a form of quantitative tightening or QT, like behind the scenes. And then the money supply increasing is a form of easing. So it's like two forces counteracting each other.
So, okay, we got gold. Looks like gold's starting to trend downward. We'll have to see if we get back above this high. But we are back above our 62, and we're still above our 200-day. And we have inflation dropping. You know, central banks globally are lowering interest rates. So, you know, the inflation that we all look at. We got the S&P 500 still going crazy as hell. You know, the market is loving Trump. We got the Dow still looking good. We got the NASDAQ still looking good. We got Apple still looking good. It's crazy.
I mean, markets are just loving shit right now.
Yeah.
I mean, this shit just high, boy.
We got Bitcoin at 98K, man. I wish we had Isaac on there.
Yeah.
I wish we had Isaac on here, man.
Isaac, if you're watching, shout out to you, buddy.
The few, the proud, the army.
Bro, okay, that's a joke, guys. Just for, hey, my vets watching, man. No disrespect, but hey, that's hilarious.
We told that same joke on a previous episode.
Yeah.
So yeah, Bitcoin's looking good. Now, guys, people calling me, should I buy some Bitcoin? It's going up. I'm not buying Bitcoin at this level. I think we'll at least come back down to like 80, probably. I don't think we're just going to blast through 100, but it is possible.
I think 70 to 80 is like the new floor at this point, thanks to all the derivatives around Bitcoin from super extremely large institutions.
And I would say the new floor for this cycle. I think in the bear, I still think we can go below it, like probably
I don't think
60.
So.
I think we'll hit 60 in the bear, but we'll see.
No, I don't think so, yeah. I think it'll be more consolidation versus extreme bearishness on the asset, especially at this point.
Hopefully. But we've been saying that every cycle, or at least the past.
Yeah, but this cycle is truly different. It's going to be very different in Bitcoin.
We're going to be saying this for as long as we're running this.
I mean, maybe, right? But I really, really think this cycle is going to be different for Bitcoin. I do think we're going to get a pullback here very soon, but I think there's definitely a new floor, like damn near permanently. 100%. I can't see it dropping below 80 at this point. And in each cycle, it's almost like if you keep adding the large players that we're adding, it just creates a new floor in the asset.
Yeah. Hey, only time will tell. You guys know our opinions on it. You got ETH starting to moon, but people thought that ETH would moon a lot more than this, given that it also has an ETF like Bitcoin, and you know, just that it's a utility token. I really like ETH at this level. You know, I think we'll see a 9K to 15K ETH this cycle. So this is an easy 3 to 5X, I think. You look at the total crypto market cap, right? We are at all-time highs, $3.2 trillion. Look at that leg. Look at all that green, guys. And this is the daily chart. If we look at the weekly, just all green. And you can see that whenever we have all green like that, like right here, we had all green right here.
That means we're off to the races. So,
And the market dropped 30%. It's not uncommon for during bull markets to drop 30%. Even when we went from here to here, the market pumped 175%, but we saw it drop 40% before it took off. So if it were to do that right now, just from where it's at, that's coming down to about right here. But in my honest opinion, I think we're going to come back to this level and test this as support before we really start going crazy. And I think it's a high probability that we'll see a sell-off before the end of the year because people like to offset their tax gains, right? We got stablecoin liquidity dropping. That means people are deploying capital into the markets. This is Tether. And then a lot of people asking, like, when altcoin cycle? Well, like we've been talking about for months, Bitcoin leads the race, and we're seeing that like crazy right now. And then people start to make money in Bitcoin. They sell their Bitcoin. Everyone's calling me about XRP. Everyone. And then they sell their BTC gains into altcoins, and then we see Bitcoin dominance drop. And this is when we see altcoins go crazy. So we saw it drop here after the halving. These red lines represent the halving. We saw it drop here. And now we still see Bitcoin dominance increasing. So I want to see this nice big drop here. And if we look at the altcoin season index, you can still see that we have a little ways to go. So when we're in the heights of the altcoin cycle, we get above this line here. We're still here near the bottom. So the higher Bitcoin goes, the better, because that's just more money that people are going to make from Bitcoin to be able to allocate those profits into altcoins.
Okay, now that we went over that bullshit, like, nah, but now that
he gonna tell me, bro, you're getting way too technical. Fuck you, buddy. We haven't seen him in a while.
No. Let's get into some good old macro data. Bro, you get on my nerves, bro.
What, bro? I don't know what the fuck.
You just look like you're not about to say nothing for the next 20 minutes.
Bro,
I don't know why, bro. All right. So, then kind of piggybacking what you said earlier in that inflation's coming down. So, we actually had inflation start to rear its ugly head again. So, let me start with the two biggest risks for the Federal Reserve right now. One risk is, and we've talked about this risk plenty of times before. One risk is cutting too soon, which would reignite inflation way more than they would like, which in this environment of a fiscally dominant regime that we're in, that is it's very, very sensitive at this point. The other risk is cutting too late and allowing pressure to mount on the downside to the labor market. And so those are the two risks that they're dealing with. So they just cut rates 75 basis points over the past two meetings.
And they cut the day after elections, right?
They did cut the day after elections, which is, in my mind, pretty historical.
Jeremy Powell probably went to the back when Trump was like, it's going to be huge.
Yeah. And it's funny because the Fed, and if you read in a book, the Fed is apolitical. And I think it's funny that monetary policy and fiscal policy is like they really have to work together to achieve whatever goal the U.S. government sets for themselves, right? They really have to work together. And so at some level, you can't be apolitical. It's like Jerome Powell has to think about the fiscal deficit. And I think that's part of the reason they actually have cut rates at these past two meetings, because beyond the reason of the labor market softening, and it's still really strong. So you could have had, a lot more softening and been okay in the labor market. It's still really strong. I know people will argue otherwise with revisions and whatnot, but it still looks really strong, right? Outside of that reason, there's really no reason to cut rates. And so I think Jerome Powell and the committee of the FOMC has definitely thought about the effects of interest rates on the fiscal deficit. And that's literally an example of the perfect intersection between fiscal and monetary policy. It's like what you do on the monetary side in terms of raising interest rates. You can look at interest rates as literally the cost of capital to the government. And so if interest rates rise, the cost of capital raises for the government. If interest rates go lower, then the cost of capital lowers for the government. And so I think part of them lowering interest rates this time around was to kind of ease some of that burden on the current interest expense, which currently sits at 6.3% of GDP.
Or as Lynn Alden would say, GDP.
Shout out to Lynn Alden. Love you, girl. It's like, nah, but... Leonardo, we'd love to have you on the pod one day. So anyway, there was really no reason outside of that to cut. So I think that was definitely factored in. And with Scott Bessent being elected or appointed to the new Treasury Secretary, his aim is to basically lower the deficit from 6% of GDP to 3% of GDP, and then grow the GDP numbers by 3% per year, primarily with a focus on deregulation. So getting rid of that red tape, you feel me? And I did a full video on this on my channel, actually, so go ahead and check that out. About bang, if it's posted yet. I think this might be posted before that video is posted, so I guess stay tuned. Anyway, while we were on the topic of Treasury Secretary Scott Bessent and whatnot, here I'm going to read off some accolades from this guy so you know a little bit about him going forward. So excuse me while I'm not looking at the screen. I'm going to be looking at this other screen just real quick, though.
I'm going to look over here.
Okay, sounds good. So he is the Key Square Capital Management Group CEO, former Chief Investment Officer of Soros Fund Management, Council of Foreign Relations member, Yale University graduate, and not that it's super relevant, but I guess it's kind of a cool thing. And for people who like hate on Donald Trump and say he's a bigot and hates gay people and all this stuff, check this out. Scott Bessent is low-key the first Senate-approved LGBTQ plus Republican member.
Which one
in
is
the
he?
history of the world. He's gay.
I can picture Donald Trump being like...
He has a husband, and they have 2 kids. I'm like, man, okay, that's cool.
Not that I have a problem with that. I know I gave a weird look, but I was just surprised. But I can picture Donald Trump being like...
Something's wrong with this guy.
If someone's like, Donald Trump, you don't like LGBT. He's like, no problem. Everything they say is a lie. Fake news. Our Treasury Secretary, he's gay. He has a husband. They do their thing. He comes to work. He goes home like everyone else. Blue-collar worker. Great guy.
That's actually probably pretty on point. I'm not going to lie. I can picture him saying exactly that.
Yeah.
And then just... I'll just be like, well,
next question.
Next question, please. Yeah, your DT impression is better. And this role was important in my mind, and I think in any investor, it should be important in your mind who was appointed to Treasury Secretary, because I mean, you're talking about the control of the IRS. You're talking about they control control our tax policy. They control our fiscal policy, and some regulation goes through them as well. And so you're talking about a very, very important position. It's like the point man for the current administration for finances. It's like when it's about the money, that's the speaker. He's the guy who's going up like, hey, here's the deal, boy. And I think he's going to be better for our government than Janet Yellen. I think his intentions to bring the deficit down is pretty great.
He fired Janet Yellen.
Yeah. He's cleaning house, so I guess it was a firing
she's
situation.
Out of there?
She's out of there, yeah.
Oh, fuck yes. I was tired of seeing her fucking face.
I love good old Janet, man. I love her, man.
You still got that picture on your wall of her?
Yeah. Mm-hmm. I got a little shrine of Janet Yellen in my room. Let me tell you, boy. I really don't. Do not take me serious, guys. Anyway, going back to your earlier point that inflation is dropping. It was dropping, but it started to turn back around. So the latest numbers on the core PCE came in at 2.7%. The latest numbers on core CPI came in at 3.3%. And the last time I looked at the truflation number, we were at like 2.6%. And so inflation has definitely turned around, to say the least. I don't know if that's going to sustain itself or if it's going to, go the other way. But the fact that the Federal Reserve is cutting interest rates, and then we have a president who loves fiscal spending, even though they plan to cut fiscal spending, we're still going to have it. It's just the deficit amount is just going to decrease, and the interest expense is going to be lower. We're still going to have a pretty large deficit, and we're still going to run that deficit for a pretty long time. And that's pretty good for asset prices as long as the market doesn't get spooked. And on the fiscal side, we're going to fund a bunch of infrastructure, which is going to create jobs, which is going to be good for wages, which is just a whole bunch of good stuff is just going to happen for growth. And then we're just going to have just more entrenched inflation. And I think that's part of the reason bond yields are relatively elevated despite the series of events taking place in the market or in politics and all this good stuff. So,
well, I know you said that you don't see a reason for the Fed to start to lower rates, but I think they don't want to just keep rates high for that long because shit will get fucked eventually, right? And I think with Trump being more pro-business policy, we always talk about, or we've talked about in previous videos that credit is good once it's used for business purposes. Give someone a job, and then you pay off the loan and not just put it into asset classes. So I like that. Obviously, I'm biased too because I am an investor and I want to make money, right? But I think it's good that they're lowering rates. I think they should just keep lowering it slowly like they have. I don't think they should just be doing these 75 bip lowerings, whatever you want to call it. So
it was 20. It was 50 then 25.
I like what they're doing. I approve, and I want to make money. And I would say that, like, I don't know who we're gonna get in office after Trump, but how I look at it is like, yo, we got 4 years to get our bag up and get our shit together because ain't no telling who's gonna get in after.
Yeah, so I agree with you. I do think it's although I believe that there is no blaring reason to lower interest rates, I think it's a good move. At first, I thought it was more so to decrease the restrictiveness of the current rate and to bring things back down to that neutral rate, which is, based on the market's opinion, is like 3.3%, whatnot, right? And it would help keep continuing to spur on economic growth. And then I thought, maybe it's to buffer against, downside pressure in the labor market from keeping rates high for a sustained period of time. And I never once thought it was to spur on inflation because we had high inflation and not low inflation. And I did think this was a danger, and I've said this on video multiple times, that inflation is not done. It will rear its ugly head again, and that's what we're starting to see right now. But I still think lowering rates was the right decision because I think we can survive as a nation with a little more elevated inflation over that 2% target by the Fed. So, speaking of the Fed, the next chairman might be Kevin Warsh. I don't know too much about him, but maybe I should make a video on him. Maybe I'll do that for you guys. Make a video on the next Fed chairman and how it's going to affect monetary policy, all that good stuff. Because when it comes to seat changes in the Senate or seat changes in like government appointed officials or whatever it may be, I mean, the ramifications from those decisions and appointments could be pretty drastic or they could be pretty nothing. It just depends, right? And this Scott Bessent one, as you can see how much attention that it's gotten over the past couple of weeks, it's one of those that it should have some drastic changes, especially in addition to Doge with Mr. Elon over there. So what are your thoughts, man, on like having a crypto czar in the government, like a dude appointed for crypto specifically? Like, do you think that's extreme bullishness for crypto, or do you think it's like one of those non-starter type things?
I am very bullish on the czar because it's basically just, if you look at the Securities and Exchange Commission and all the laws that go into regulating these securities, crypto is very different, right? And you don't want to use the same rules for something different. It's like, for example, when Wilt Chamberlain was in the NBA,
good old Wilt,
they lowered the rim from 12 feet to 10 feet because he was too tall. Right? He was just dominating everyone.
Wait, the rims used to be 12 feet?
Yeah, it used to be 12 feet.
How did I not know that?
Yeah, it used to be 12 feet. So now it's just like with crypto, we're still playing off these old rules when we have this new asset class that's different from all the other ones. And all these other ones can kind of integrate with crypto, real world assets, all the things we talk about, tokenization, all this stuff. Crypto can have an effect on every single asset class. You can't say that about other asset classes, right? It just doesn't make sense. So there needs to be new rules for this new player in the financial system. So to a point ahead, someone who's going to take it serious and like actually try to put proper regulation in place. We were just at a meme coin event like an hour before here, and we were talking about how most crypto people, like the real crypto people, they're either out of the country or moving out of the country. But now people are starting to move back in because Trump's in. You got projects that are probably going to start coming back. 20 years ago, most of the companies on the S&P were tech companies, but 20 years before that, they were like industrial companies. So it's not weird to think that 20 years from now, the top companies will be blockchain based, or companies that are still established today, like Apple, that have a big blockchain component. So it's just like, we want to have a favorable environment in the US for it to flourish here so that we don't miss out. So I like it.
Boom. When she thought you were done, but you're just a chill guy who knows crypto.
So yeah, guys, that's pretty much everything we have for you right now. This is a time to really take investing serious, like really double down. Wintertime grind, hustle hard when it's cold out. Like, we're going into 2025. There could not be more bullish positions. central banks around the world lowering rates. We have a president that's bullish for economics. We got Bitcoin halving. We have Bitcoin and Ethereum ETFs. Like, there couldn't be more better conditions, guys. So
shout out to Peasy, by the way.
Yeah, really focus up. So yeah, you guys are gonna start hearing from us more. We got a lot of content we're gonna put out. We've been doing a lot of research, got our heads down working.
Hey, we got them guns pumping too, you feel me?
Yes,
Stop
sir.
playing. Come on, man. So yeah, as always, guys, we appreciate you. If you have any recommendations, things that you want to see here for us to discuss, please let us know in the comments. Guys, we appreciate you. Thank you for watching. And we'll see you on the next one.
Peace out.